If you watch my videos every day, you're already probably in the compound, but if you're not, you missed out on this call on Bless, because Stone was calling Bless and he was saying, watching this range closely, he put on 3 ranges, context, everything, so everything was clear. But I think you're already in the Discord if you watch this, but if you're not, bro, you don't know what you're missing. But I will go back in time and we'll go for the trade to fully explain it and to fully make sure everyone gets it, because this was a very interesting trade, not something you see always, because this was a very random coin, right? You always see me trade very high volume pairs and not Bless, you know. So this was a high time frame structure. We had a very aggressive pump, and that of course leaves behind demand, and you have this big demand zone right there, which you of course came in, but I'm not gonna even use that demand zone, because of course the first move down, the last move down before going up aggressively is your last very important demand, which we came into right there. And right here we are going, we are lower in and we are arranging. So what happens here, what a structure is saying, structure makes a lower high, makes lower highs, lower lows right here, and this is structure, okay? And right here you see horizontal price action starting to develop. And when does your range really start? Because I can say my range starts from here, with a deviation here, with a deviation there, but does it look clean? No. Like, to be honest to yourself, it does not look clean. So your range begins right here from low to high, boom, boom. And why? First, one, it doesn't look clean, and two, you maybe think, hey Tim, you make a higher high there. No. Why not? Because it's not valid on a higher time frame. As you can see, when you go on a higher time frame, when you go on a 3 hour already, it's not even valid, because this is not valid structure. You go down, you go up, you think, hey, no, because this is one candle and one candle, so two bullish candle, but not two consecutive bullish candles, so it's not market structure. You need two consecutive bullish candles, okay, and two consecutive bearish candles for market structure. So what do we want to see here is this range. So we're watching this range, and what do we see? Hey, on the downside is already deviated, so we have a deviation on the downside, on the downside of the range. So this is the deviation, boom, and this is your tap 1. So you have your tap 1, you have your tap 1 there, and you have your deviation of your tap 1 right there. So right now you have your tap 1 and tap 2. Now we're gonna wait for our tap 3 to break structure. We enter and target the range high, because that's how the schematics work, as you know, as you'll watch my videos. So what are we gonna watch here? We're gonna connect the dots from 2 to 1, and we're gonna watch for a tap 3 POI. And a tap 3 POI could of course be deviate this low, okay, deviate this low for a model 1 and go higher. But our tap 3 POI could also be extreme liquidity or exactly extreme demand. So we're watching for extreme liquidity or extreme demand, and that's your last demand left before price is going up. And what is our last demand? Do we have a last candle going down right here on the higher time frame? As you can see, that is not the case. We also don't have a big wick we could use. So right here you're watching for your extreme demand POI, but it's a bit harder because you want to have that structure demand POI, and you have of course demand right here, but this is not the demand you want to use because it's too high up, and it's not your last demand. You first move down before going up. This is going to be your extreme liquidity, of course. So your extreme liquidity POI is clear, and when I play price as well, you can see it going down slowly, and you can see it going down to that POI slowly, and you see indeed it grabbed that extreme liquidity. So when I go back in time a little bit more, you see we grabbed our extreme liquidity POI, and from there we didn't deviate this low on Blast. Maybe you did on Maxi, but right now I'm watching the Bybit chart, and right here you're watching for a break of structure after grabbing that extreme demand right there, okay, extreme liquidity right there. Is there a break of structure? And right here structure is going like this, because structure is going down into your extreme liquidity POI, okay, but right there you need to break structure between tap 2 and between tap 3. And if this is step 2, as I said, you need to break structure between tap 2 and tap 3. So what is structure saying? Structure is going like this, and you have to break structure. Boom, you have to break structure, this structure, to go higher and to confirm the model, okay? So, breaking structure from tab 2 and tab 3, the lowest point, like a domino effect. And what do we see here? We have no structure, not even on the 1 minute. Because when we go down, one candle going up, one candle going up, and these are inside candles. So structure is going like this, and right here we just make a higher low and never break structure. Like this is our last structure break. We never break it to confirm it. So right here we go lower, and we go lower, and we go lower, and right here we deviated this. So, and here's happening something very interesting, because I'm gonna extend my range to get rid of that line. And right there, I see something developing, because what is happening? We have structure like this, boom, and you can see the range type of price action you got here. So you draw your range from low to high, and you see you didn't get a schematic right here. You also didn't grab extreme liquidity yet, but you didn't get a model 1, for example, here to trade to take higher, because that's of course also valid on the low time frame. But what do we see here is that this was your range, but you never confirmed the model. So this was your range, boom. Put it on the chart like a range, and then I see here another range forming. So go on the lower time frame, and I see again, hey, price going from low to high because you are in a downtrend. You are in a downtrend, like price is going down, so you draw from low to high, okay? So you are in a downtrend, and you see right here something very, very interesting happening, because you are going lower. You're deviating your tab 1. This is your tab 1, okay? Range low, range high. You're deviating that tab 1, so you extend your range. And right there, you can look for your tab 3 POI. And tab 3 POI is going to be your extreme liquidity. Your first move down before going up. Okay? So your first move down before going up. This is your extreme liquidity. And you see, after grabbing that extreme liquidity, we even grabbed the tab 2. So we deviated the tab 2. So we had a tab 1, we had a tab 2, and we deviated this tab 2. So right now we're having a model 1 accumulation schematic, which will confirm between tab, if it breaks structure, between tab 2 and tab 3. Okay, so when we break structure, right here, what is structure saying? Boom, 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 break it, and we confirm it. So this is going to be your break of structure. And let's see on what time frame that break of structure is, because you need it to be valid on the highest possible time frame. And I see in the highest possible time frame is a 3 minute. So you wait for a 3 minute close above that structure, and you see here you wicked it. And this is not a close, guys. So you enter on the close, boom, right now it's confirmed. Stop goes below the model, of course, and this is going to be your higher time frame tab 3, and you target the range high. And I target the range high right here, boom. That is going to be the Wyckoff target, of course, for 22-hour trade. And when I play it out, you see we didn't grab our stop loss, and price went higher as we thought it would be, because that's the trading concept. And right there, price went higher and higher and higher, and this was just an insane, could have been an insane trade if you took this. So Tom, shout out to Tom. I didn't take it myself, by the way. I'm not a fake guy who says I take trades and then don't take them for real, you know. I'm always real in what I do, but you guys already know that. So I also don't even need to be fake, right? Because you guys have seen my TA, you guys have seen it work. So this was just an insane trade, guys. What I would have done on a shitcoin like this, because to be fair, it is, right? I would have taken a good take profit at some other points, because if your entry was this insane, and of course, by the way, you could have entered on a higher time frame break. You could have not entered it on the model inside of a model, but you could have entered right here when structure was going. Wait, I'm tripping. When structure was going like this, on here you have 2 candles going up, 2 candles going down, and there you have your break. So on a higher time frame, for an even for a more, how do you call it, for a more safe approach, this could have been your trade. Boom, at the close, stop goes below the tab 3, and you target higher, because that is breaking structure between tap 2 and tap 3. Okay, this is the higher time frame structure break, and then you could as well target the range high, of course, for still an insane, what was it, 9-hour trade. But I probably I wanna talk about this now, because I want to talk about take profits, and that is not a topic I discuss that in depth very on my that much in depth on my channel. Right now we're right here, and when I remove the EQ, it's gonna be a bit more clear. Let's look at the volume profile, and let's see where I would have taken my partial profits if I entered the trade. Drag my volume profile from the beginning to the breakup structure, because that is where you see your trade, and you see your volume profile perfectly aligning with this supply POI. Okay, this is gonna be your structure supply, boom, supply POI. So you see it rejecting from that as well. So this would definitely be my first take profit. And right there, you're already up a 11 RR, guys. So probably my first take profit would even be in right here, and then just to de-risk the position. But because these are R trades, this is not normal. A normal R trade is like 2-3 RR, guys. This is insane. So my first take profit, big take profit would definitely be right there. And when I see price wicking it like this, like boom, 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 but leaving liquidity behind, I will still leave it open, but I would have taken some more profits right here when this broke, and just let the rest run, and especially look for hedge shorts in the market, because that's the thing you want to look for, because then you have a de-risk long and a de-risk short, and that's the way how you want to play the market. Guys, if you want calls like this, if you want my TA, if you want my lower time frame TA, which I'm not posting on my Twitter anymore, if you're not in the Discord yet, I think you are, but if you are not and you're watching this, I would highly suggest you to join. You can ask private questions to me as well. We will answer. Wozo is in there, Thomas in there. So guys, see you in there. Link is in the bio. Link is in my Twitter bio as well. And I cannot wait to see you in there, guys. Okay, see you in the next video. Ciao, ciao.